the bond market appears to be thinking that perhaps they could have, the market could get nervous if there would be a change at the leadership of the Fed. The market always tends to be, bond market tends to be nervous about who's leading the Fed. The personality of the Fed chair is very important. Beyond that, though, looking at the equity market, we'd have to say when it comes to inflation, you want to own near term, you want to own the materials, and you want to own energy, which looks like both still have further upside in those particular sectors. But you also want to own other sectors as well. Consumer discretionary that can pass on the cost to consumers when they're hungry to buy things. I don't mean food, but just the spirit to buy. Industrial stocks on this infrastructure play. Technology doesn't go away. It's part of our lives. It's deeply embedded in it. And you also you want to own the financials because you're going to get a steepening of the yield curve once the bond markets gets over this nervousness.
But we've been waiting on that for a long time, John. I mean, that's the whole point. Like, when does that yield curve change? And I know it's 5:50 in the morning, the yield curve make people want to go back to bed, but it matters for the equity market, especially for big banks.
It certainly does. It matters particularly for the big banks near term. It's probably better for technology near term in that sense. And that's why we barbell growthier value with garpier growth. And so we've got consumer discretionary and tech on one end, and on the other side of it, we've got financials and industrials.
Is there anything we just absolutely, positively have to avoid owning right now?
I'd say right now that the funny thing is, the one area that we think will underperform is utilities, because with the utilities, while they right now you have the potential for interest rates to come up as we get into next year. Problem with that is that's when utilities become recognized as a bond proxy, and they're highly regulated in terms of what they can charge. So that's going to would be an issue for them. They'll be able to raise their costs with inflation, but we'll just have to see. We prefer things that offer garpier growth and growthier value.